So now we're going to face a trade war with Canada over digital services taxes. Joining us, National Economic Council Director Kevin Hassett. Kevin, thank you. So the president was tough on Canada at his press conference today. The battle is over digital services tax on our great technology companies. I don't know why Canada is being so stubborn. We've stopped negotiating with them, according to the president. What can you tell us?
Well, you know, we spoke with the Prime Minister about this at the G7 meeting last week. We urged them to delay, you know, they were setting a multi-billion-dollar tax bill to our big high-tech companies on the 30th of June. And we said, delay it for 30 days while we're negotiating, and they refused to. And the digital service tax is an extraterritorial, really, almost criminal act, right? Mm-hmm. They're taxing American companies who don't necessarily even have a presence in Canada. Mm-hmm. And so, and it's a 3% of revenue tax, not profits, revenue. And so it just doesn't make sense that they could do that. The only reason it doesn't violate our tax treaty with Canada is they're claiming it's not an income tax. It's a revenue tax. I mean, can you imagine how preposterous this is?
That is preposterous.
And we spoke, but anyway, the point is they're going to have to remove it. They're going to have to remove it, and I think they know that.
I have heard the president many times, Kevin, say that only the American legislature can tax American companies. No foreign legislature can do that. And that's what's happening here. Foreign legislatures of the OECD or Canada or whatever. And can I ask you about Europe? Europe's digital sales tax now, is that been suspended? Because I'm reading that the Republicans are taking the so-called revenge tax, 889, out of the One Big Beautiful Bill. That was going to be a tax on those countries that were taxing our companies. Now, is that locked in? The Europeans behaving better than the Canadians?
Right. No, not really. Some of them, yes, some of them, no. But here's the thing, that if you have a business, you set up a Kudlow hamburger store in Canada, and you've got chains across the U.S., that when you make money in Canada, of course, Canada can tax it. The idea is that what happens if there's somebody just has a website in the U.S. and somebody buys a service in the U.S. and all the income is in the U.S., Canada's saying that they get to tax that. And other, you know, France is saying that too. There's something else called Pillar 2, which is a global minimum tax that foolishly Janet Yellen agreed to, that basically said if other countries think that our corporate taxes are too low, then they're allowed to fill the gap and charge tax because our taxes are too low. And so imagine if you're a company that has a lot of expensing, and so on, so you might not pay a lot of tax because you're making so much investment. Well, then they're saying that they need to have the right to level the playing field by taxing us more, imposing a tax, again, extraterritorial tax on us. And so the G7 has agreed to language that they're not going to do this Pillar 2 thing, but some of the countries are still keeping their digital services taxes, and we're going to work really, really hard to take those away too, because again, they're very unlawful. Of course, if American companies earn money in another country, then that country can tax it. But when they're reaching into the U.S. and taxing our companies here in the U.S., you know, that's something that we're not going to stand for.
Sure. I think that's 100% right. Absolutely. But now, shifting gears a little bit, let's talk just a moment about China. The tariff deal may be in place, but the export restrictions are not yet. I mean, China's still slow walking the rare earths. That deal has not been completed yet, has it?
Well, I think that we've finalized language. They're issuing licenses. We've got a white list of companies that they need to get the stuff to. And so I think when the president mentioned that there's a deal with China, he's finalizing the excellent work of Scott Bessent and the rest of the team in London. And we believe this stuff is moving forward now. So speaking of Scott Bessent, he was on Maria's show earlier today. Now, dealing with, 18 countries or 20 countries or something, if there's good faith negotiations going on in that group of our major trading partners, do you think President Trump will extend the so-called pause, which ends July 9th, to allow those discussions to continue? The president could decide to do that, and he could decide to do that, especially if we have an agreement in principle. But we've got to fill out the fine print, and so I think that the president is not a person who doesn't want to make a deal, right? He wants to make deals, and if he needs a little more time, if he thinks he does, then he'll give them more time. But that's his decision.
How many you think? I'm not asking which, but I'm just saying roughly how many trade deals do we have? Let's call them trade deal frameworks. Do we have coming into this? How many do you think we have?
They're in various stages of being done, but it's more than 20 underway. Jameson Greer and Howard Lutnick and Scott Bessent have been working really, really hard to move the ball forward on these things.
And final one is the stock market is roaring, Kevin, is roaring up today. It's over 400. The S&P and the NASDAQ have now both of them have hit all-time highs. I love to talk to you about this. What do you think's driving the stock market up? I mean, it's really running.
I think it's rational exuberance about all these Trump policies. We're going to pass this big, beautiful bill by the 4th of July, and think about all the good news for the stock market and for workers in that bill. So, of course, the market's celebrating. It's celebrating these great policies.
All right. One big, beautiful National Economic Council Director, Mr. Kevin Hassett. Thank you, Kevin. Take care of yourself.
Man.
Talk soon.